Of course, this is not financial advice and for entertainment purposes only. Investors, welcome a very new guest, Mr. Jarrett from Blossom. Now, if you guys want to see both of our portfolios on Blossom, it will be in the link in the description of this video, as well as in the pinned comment section. Now, for Jarrett, his Blossom bio says that he is a growth and dividend investor at 32 years old, and that his goal is that his financial journey can help you on yours as well. Jarrett's portfolio is valued at over $1.1 million, which is crazy at just 32 years old. Now, Jarrett earns about $50,000, just under there, per year in dividends and distributions, thanks to his 15% dividend yield, whereas top funds pay him the most, like MSTY, ULTY, MSTY, HUI, HHIS, and YieldMax. And another fun fact about Jarrett is that his portfolio in the last 1 year and even just this year is crushing the S&P 500 index by quite a bit. So congratulations, Jarrett. First question for you, Jarrett, is can you provide a brief overview on how you got here today with about a $1.1 million portfolio at such a young age?
Yeah, so I guess right from the start, I've kind of always just been interested in money. Just kind of same old thing. I just always wanted to kind of, if it's flipping something, whatever it was, I just loved. If I still bought something for 20 bucks, wanted 40 bucks kind of thing. So basic thing, just grew up from like not a very wealthy family, anything like that. Just kind of realized like my parents were super hardworking, but they never really had money. So I always thought there's got to be a better way to make money. So just kind of always was reading and stuff like that. And then just kind of got into the stock market. I originally kind of went into real estate thinking I was going to be a big, own a bunch of doors and all this stuff. And then I'm up here in Canada. So then once you start crunching numbers and stuff, you realize it doesn't really make sense because everything's so expensive and it just wasn't for me. And it's such a slow build. I went and played hockey when I was done school. And then when I was done hockey, I kind of realized like I got to start my life. So I didn't know what I wanted to do, but I knew I wanted to make money. So I had a couple buddies in power engineering. They made good money. So I remember I signed up for the program. And I remember the first day of school, I didn't even know what power engineering was. I wanted to make as much money as I can to build asset classes, got into the stock market, and then found a compound interest calculator and then got hooked from there. And my biggest thing is I realized is I want to put as much money in the market as I can. Once I learned that once you have a pretty good chunk in there, it's a lot easier to make good money. So from there, I just made it my goal to just do everything I can to just have as much cash in the market and let the market kind of work itself.
How much money did you start with in your portfolio, and when, at like what age did you start investing?
Like I finished my power engineering, and then as soon as I finished, oil crashed. So I couldn't find a job to save my life. So I was driving everywhere for any other job. Like I was driving 7 hours every 4 days just to work at a place that gave me some experience. And then, so I had no money till I started up north, and then I finally got the job I'm at now when I was 25. So 7 years ago. And I started here with 30 grand to my name.
So in 7 years, you built an over $1 million portfolio.
Yeah.
That's crazy. What is your investing strategy that led you to have an over $1 million portfolio, as well as $50,000 per year about in dividends?
It's kind of changed throughout, but it started out just the long-term ETFs, like everyone preaches, just buy the S&P, and at the tail end it'll be there. And then I got into like the covered call strategies, kind of made that a percentage of my allocation because just the thought of building income just for I lose my job, something like that kind of thing. And then, so I've just been pumping kind of those. And then I kind of, with these covered calls, I kind of got interested in and learned what they're doing. And then me and two other guys from work, we kind of just understood how they're doing the covered calls and stuff like that. And then we ended up, like I opened up an options account and I started doing like the covered calls and selling puts and stuff myself. And that's been a big game changer, that one. I think in the last, I've done it for just over 4 years, and I think I'm over 10x that account just doing those. So that's really built the portfolio quite a bit.
On your Blossom bio, it says that you are a growth and a dividend investor. So why both? Why not just all in growth, or maybe just all in those cover calls and dividend funds?
The growth, it's too proven that it works. And I'm young, I'm 32, so I want to have a good chunk of that in the S&P and the NASDAQ and stuff like that. And then the dividend stuff, I like building the income because I work away up north. I want to eventually move home because I got a wife and a young kid and another one on the way. So I want to be closer to family. So the dividend side was more so just building, kind of taking away that fear of like, okay, if I can make X amount in there, at least if I took a job that pays less, if I had to, I kind of have some money coming in kind of thing like that. And then just like I said, the growth stuff is just you go down any of those elements, like long term, it wins. And it's nice too because with the options that I run, like the options account, it's pretty active. Like I'm always on it and stuff like that. Where it's kind of nice. You buy the S&P, you buy the Nasdaq, you just forget about it. So I would say I'm 30% long term with those ETFs, 30% dividends, and then 30% in that options account that I'm actively managing.
Now, in your portfolio, you have some cover call ETFs, mostly by YieldMax, to my knowledge. So, what about cover calls and passive income did it make it so appealing for you to jump in from going from long-term ETFs that have like a super low yield to these ones with, 80%, 90%, 100% yields? And then I know you just said that you do your own options as well.
Kind of slowed up on the yield maxes and stuff like that. I've sold some. I've kind of noticed like the NAV erosion on the higher stuff, and I still have them because I'm a gambler by heart. So it's one of those things where it's like I'll take a percentage of my portfolio, put it in here, collect the dividends, and if I get a year or two out of them and get my money back, then after that it's whatever happens. Misty and like Hui and stuff like that. It's just kind of, if it works out, sweet. Like it's the sweet ride, and we'll see. Like I'm going to give it a couple of years, and then like I'm not going to bash on them or nothing like that. But at the same time, anytime I get a dividend, I'm not reinvesting it. I'm usually buying one of like the H maxes or else the VFVs or something like that.
So, do you think that YieldMax ETFs is like, as an investor, like you're gambling if you're investing in those, or is it just you think could work out long term, but you're just using the income to invest in other ETFs and other stocks in your portfolio?
I wouldn't say it's gambling. It depends on your situation. Like if you're an older guy and you want that income, I'm sure you're tickled pink, right? Like, but for a guy that's 32, I just know that I don't want to have too much into them. So just kind of using that to just fund, like have that revenue coming in. So if you ever need that cash, you have a paycheck. But if not, through the dips, everything like that, you got constantly capital that's being put to work to buy the long-term ETFs is kind of my strategy with that one. And I kind of only I get taxed really hard at my job. So I make sure that all my dividend stuff is in the TFSA just so I am avoiding paying the tax bill kind of thing. So I'm kind of keep those in there. And then, like I said, anything that comes from it, I'll just be funding those long-term ETFs.
About 30% of your portfolio is to VFV and then ZQQ, which is basically for US investors. Think about it like VOO for us and then triple QM. Why do you like investing in the S&P 500 as well as the NASDAQ 100 for long-term investing?
There's too much track record that even I want to get my ZQQ up because I want like the tech exposure and stuff like that. I think with those ETFs, it's just, there's too much like proof that long term those guys win. I also like with the option stuff, like it's a little more risky and a little more work, like more involvement and stuff like that. So I want to make sure that if something goes wrong over there, I'm still doing the element that's proven itself time and time to be there when you're time for retirement. So that's why I keep funding those as well on the side, just because I know at the end of the road, it's going to be very, like, you're going to be happy with the returns.
I see that you also have individual stocks. Now, which ones are those that you like a lot? What makes you decide to pull the trigger on one? And when do you decide to sell?
Yeah, SoFi's been sweet. That's kind of where I go with the options. Like I find companies that I want to own and then I'll sell cash, like I'll sell puts on them. And then once I own, a lot of times if I think they have, a lot of room to run, I'll just sit on them. And then when I'm ready to exit, I'll start selling the covered calls on them. But SoFi's been amazing. I took a pretty good stake in Fubo actually. So I'm happy with that. And I'm really hoping that Disney deal goes through. So that's one. And then AMD, I put a lot of money in AMD. I just think with this AI boom and stuff like that, like the chips and everything, like I think there's going to be a time like where it's not AMD versus Nvidia. I think they're both there's going to be enough market share for them that I think once AMD, gets their 350 chips and their 450s out, like the revenue is going to be there. And I think they're going to I think they're set up for success for sure. So we'll see.
I'm assuming, are you like the first investor in your family to even like have like a big portfolio and especially be a millionaire at 32 years old?
Yeah, I'm definitely the only one that invests and has any portfolios like this. So yeah, both my parents, they definitely don't do any of it.
What are some things that you did to build like $1 million portfolio, whether like investing wise or outside of investing, that led you to be a millionaire?
Like I'm an educated risk taker, I think. I want to get as much money in the market as I can. Because like, for example, like, yeah, it's, if you can do the small ETFs, little bit of money, blah, blah, blah. But it's like, maybe I don't get the money till I'm 65, but like for me, I love golfing. You know what I mean? So maybe at 65, my body's shot and I can't golf. So I just want, it's like, yes, I want to retire, but I also want to retire while I'm young and be able to live the life I want. So I kind of just like, I bought 3 properties when I was kind of into that real estate stuff. And then I was just always like, can I get a better return in the market? Or is it like, I didn't pay down the debt. Anytime I had some equity, I would do like I did a refinance just to keep putting the capital in. And I just kind of kept building those portfolios. And then anytime I had any extra cash, I was throwing it in there. I get a bonus from work. It was going in there. So I just did anything I could to flood the market with cash. And then, I mean, obviously we've had a nice bull run, so that's definitely helped. So I guess that's kind of the biggest thing is I just always, when I was looking at debts or anything like that, it's if I'm paying 3-4% on this mortgage, I'm not going to put anything extra down. It's going in the market because I feel like I can get that little more. I just found that spread is compound for me. It's kind of nice. So my thing is now I've built the portfolio and I can hopefully run with it. And then maybe now if I have some good runs or something like that, then I can maybe peel a little bit back and like put some down on some property or something like that, just to kind of lower that side of it too. So I find that's worked out really well for me doing that.
I'll ask you one tough question. So would you rather retire at age 40 with $3 million or work until age 60 but have 20 million?
Yeah, that's the tough question. I think I'd retire with the 3 million and then just try to find something that I truly love. Like I like my job, but I hate being away. And I don't love the work. I love the guys and I love the money kind of thing. But I prefer like what I love to do is like helping people with their investments or these podcasts. I haven't done a ton of them, but like I enjoy jumping on these. So I'd probably do the 3 million and then from there just try to build something out of something I love kind of thing. And then hopefully that works out. You can still get to the 20 million kind of thing.
In terms of like you investing a lot of money in the market to get that compound interest going, let's say somebody gave you like $10,000, you could spend it. Are you going to invest at all? Because that's kind of how I go is if somebody gives me a lot of money, I invest like 95% of it.
Yeah, 10 grand I'd throw it back in the market instantly.
What financial habits are like crucial to be a millionaire in the market? Was it frugality? Is it high income? Is it discipline? Is it just giving up on some things like, extra spending on like alcohol or extra spending on like things that like we just don't need?
I'm not crazy frugal. Like I could definitely cut that back if I wanted to, but it helps I have a good paying job. Like that's definitely sped up my journey for sure. So I'm thankful for that. And then I also just make myself poor every month. Like I know how I am. Like when I get paid, if I just let my checking account sit at a good value, I'll buy stupid things. So as soon as I get paid, I pay my bills and throw everything else in the market and keep $1,000 till next payday kind of thing. So it keeps me, but I don't buy like nice things. Like I'll wear a free t-shirt for way too long kind of thing. And I mean, I don't need that kind of stuff. I like to spend a little money on travel and obviously make sure my family's taken care of. But other than that, I don't really treat myself too much.
For cover call ETFs, should investors avoid them if they want extra income, or should they be thinking about adding them to their portfolio if they want to retire early?
I think it's all depends on anyone's situation. If you're young and you can only buy like you don't have a ton of cash and you're young, I don't know. It depends too if you like your job. Like say you love your job and you're happy staying there, well then I would probably maybe the longer term ETFs kind of thing like that. If you're in a situation like me, you like the job but you're at a point where like I want to be home with my family and stuff like that. Maybe that's gives you that little better mindset. Like, okay, if I try something new and it doesn't take off right away, I have the covered call ETFs and like money coming in that I might not be getting ahead, but at least I'm paying my bills kind of thing like that. So I think it's every situation's different and who it is. So I think that's kind of where like if someone approached me with it, asking questions is I'd really dive deep into what they want and where they're at and kind of build a plan that way.
What are your thoughts on growth investors not liking cover call ETFs because of the capped upside and underperformance relative to the underlying asset?
I get it. Like they're right. I think it was Ben Felix and Adriano just had those two videos or whatever, and I listened to them both, and they're both right. I think Ben, that's probably the smartest guy on the internet. Like the way he's got his research done and stuff like that. But then what Adriano said is like that the investment of just the peace of mind or the fact like he's done working. So that kind of goes back to your question: would you rather have 3 million and be retired early, or 22 million and retire at 65? So I think there is no right answer. I think it's what's best for you. But like I said, both those guys have great points and they're both right. They haven't been around that long. That's my only gray area. They don't have the track record where the S&P and the long terms do. That's kind of why I don't want to go all in either, because like you said, you are capping the upside on these covered calls and you're eating 100% of the downside. So maybe in 20 years, then we can have this conversation and be like, yeah, the covered calls are just as whatever it is, but maybe we missed something, and then, like I said, it's so based off your own personal wants, needs, and situations, I think.
For your portfolio, it's beating the S&P 500 and the stock market. So how did your portfolio beat it in the last year? And is beating the market something that investors should always be thinking about doing?
Well, I mean, that's always the goal, right? You'll have to run a 20-year trend on me and see if I can continue to beat the market. So it's one of those things where it's like, I don't think I'm special or nothing like that. It's been a crazy good year, and a few of the names that I was super bullish on just it worked out for me kind of thing. And I found doing my own options, I'm blown away with how much extra cash that makes me, because it's insane, right? Like SoFi, for example, I was collecting premiums. Like the way I look at that is like, okay, when it was $7, it's like I can buy it at the market today for $7, or I could sell a put, collect a nice juicy premium, and then in 2 weeks, if it's dropped, I get to buy it for under 7. So it's kind of like, yeah, if it runs, I missed it. It is what it is. But for me, it was just like, yeah, I'm agreeing to buy a stock on sale just 2 weeks down the road. So I just loaded up that way, and I ended up getting filled. So I ended up with 5,000 shares, and then just doing my research, watching videos, watching conference calls. Like I love Anthony Noto. I think he's doing great things. I love how he's in the banking service and he's still got that conservativeness, like, because if you hit a recession, that's not the companies you want to be in kind of thing. But I like how he's taking his time and stuff like that. And it's worked out well for me. Like I haven't even sold the covered call on SoFi yet because I'm not ready to exit it yet. I kind of got burnt on that on the start of my options because I do the wheel strategy. So I was just selling puts. And then as soon as I owned them, I was selling covered calls. And a few of them, they were on companies that I didn't want to get rid of. And then they had the big run in the upsides and I missed all the capital gains in between. So I just started kind of changing my strategy a bit and just sold puts on stuff I want to own. And then I sit on them. And then once they run and they've hit spots, I'm okay exiting the positions instead of just hit and sell at the market. I start selling covered calls on them, collecting premiums. And then if they run past my strike price, then I'm happy to exit it. And at least I've received the premiums along the way kind of thing is the way I'm kind of going with it right now.
Investors who are cover call investors, buying funds and then getting income from them, be also thinking about doing options themselves and selling cover calls themselves versus paying a 1% expense ratio for a fund manager to do it for them.
Yeah, I mean, 100% they should be, as long as they're like willing to take on the work. You gotta want to learn about it, and you gotta like the stock market. Like if you're just a guy that's like, I like the income, but like buying stocks is like, I hate reading on it. I hate learning. It's boring. No, like doing your own options it's gonna crush. Because I'm on my phone. Like I'm not making trades every day, but I'm definitely looking at it every day. But it's because I like that. So like if you're like that guy, and I mean, if they're watching your channel, they probably are like those. but you need to have the basic understanding. Like I've had lots of guys on Blossom reach out to me and they want to learn more about options, but they might not, like they're very new to like the investing. And it's like, well, I can't like, you can't jump into it. And I think if you put in the effort, I think it's a great for people to do because you can definitely crush the returns compared to just buying some of these funds, I find.
Now, what is your retirement goal? How much money you want in your portfolio and how much dividends you want to earn per year?
Yeah, I mean, when I say retire, I'd like to be just, I'd say 40, like, but I'd still be doing something, I think. Like, I want to kind of get more into like this kind of finance stuff. I enjoy it. I enjoy talking to people. I enjoy helping people. I get a pretty good feeling when someone comes to me and you help them set up their portfolio and just keep it basic with them, but show them how the accounts work and stuff. It's a pretty good feeling when, especially these young guys, like you're like, wow, you figured this out at 20. You know what I mean? Like if you just stick to it and it can be so simple and people can make so much money. But I'd like to be like at 40, it'd be cool if I was just like waking up every day and just hanging out with my family, selling some covered calls, selling some puts, collecting some dividends, watching the market, maybe doing these podcasts. Like that's kind of the dream for sure.
So no portfolio balance or no like
Oh
income per
yeah.
year?
I think 5 mil would be sweet. I don't know if I'll be there by then, obviously, but I think if just for like quick thinking, like if you got 5 million, you can be pretty safe with it, plus take a little risk. And I think you could live a pretty good life on what you're making off that.
So what are some things you're going to do to achieve retirement by 40 and all those goals you have?
Just pray SoFi goes to 200.
Do you have a price target?
Like it's on this big run, and I'm like, I've kind of went past my price target, but nothing's really changed. In their last earnings, they crushed it, and they still haven't really come out with too much. Like, they still got the crypto side, like they got the level one options. And now with them cutting interest rates, there's going to be people refinancing. The only thing that takes SoFi down is a recession right now, I think, unless some major news comes out. But I don't know price target because, like I said, it's been doing so great that it's kind of blown past where I thought it would be. So right now I'm kind of just making sure no news has changed and just kind of sitting it on my hands and riding it out for a bit too, especially with the rate cuts coming. It's going to help. I mean, obviously that's probably, priced in, but their last earnings I was really happy with that. So they can continue on that growth. And yeah, I'm just going to wait it out. And like I said, if it went stupid or something, then maybe I'd sell some covered calls on it. But until then, I'm definitely just watching it.
What's the myth about becoming a millionaire through investing that you wouldn't want to bust? Yeah, biggest myth that you think that people have and that you maybe think is not true.
You need to have a ton of money to do it. Like you don't need much money. You just need to know where to put it. And I mean, obviously it's going to take you longer if you don't have too much, but it's just, there's so many people I talk to or meet with and stuff. And well, I can't have $1 million in the market because I only make 60, 80,000. It's like, well, you're 22 years old, some of these guys. And it's like, get a compound interest and you'll be surprised how much money you could have. You know what I mean? Or I think that's the biggest one. It's just everyone thinks people with money are either come from money or they're these big business owners and stuff like that. It's once you understand how the market works and you're willing to be disciplined and just let time do its thing, it's pretty impressive how much you can end up with.
If you could give your 18-year-old self one piece of investing advice.
When I was 18, I didn't have any money, but I definitely had no problem finding $200 to go to the bar. You can still go to the bar. Don't get me wrong. And you should have some fun when you're young, but just throw $200 at 18. It'll turn into something. Don't buy the new vehicle. I did that. I mean, we have a new vehicle now, but I got a wife and kid, so I want them in something reliable and stuff like that. But when I was 18, oh yeah, I just wanted a nice truck and money for the bar, and that doesn't pay too many dividends. So I would say fight yourself on that. And if you're young, do what I do. Like if you start making, like, even if you get a bad job, but that's the first time you're making a paycheck, you think you're crushing it because it feels good the first time you have money. Like make yourself poor. You get paid $3,000. Like set up a payment that 2,000's gone and live off that 1,000. Because, and another thing is watch the debt. Like I'm happy I did the properties because I spiraled it with it and stuff like that, and I grew it and I was smart with it and stuff. But the debt builds up quick, especially when you start families and stuff like that. For me right now, like I'd love to quit tomorrow, but I have bills and stuff like that. So if you're young, just make yourself poor. Don't buy the new vehicle. and just start early and learn as much as you can.
For investing in your portfolio, do you prefer dollar cost averaging or lump summing?
I can't hold on to cash. I'm terrible. I feel like I'm missing out. So I just dollar cost. If there's money in there, I buy. I wish I could. I'm terrible. Like, because there's not like so many times I've tried sitting on cash and then all of a sudden market moves and I'm like, I mean, there's studies on that too. There's the biggest thing is just having the money in there. Obviously, have a little bit set aside for a rainy day so you don't have to bleed the portfolio if something goes south, kind of thing. But from other than that, I keep about, I don't know, 25 grand in a GIC that just sits on the side for a rainy day. And after that, every other dollar I can goes right in the market and I'm buying whenever I can.
Now, what are your thoughts on a recession if it were to occur and a stock market crash were to occur, because your portfolio, everybody's portfolio would be down? So how would you react in that scenario of a recession?
I mean, it sucks. Like, no one likes to see their money go down. Like, even a guy like me that has a big risk tolerance and understands that the markets are going to have its dip. It's terrible logging in and you're down a house. It's not easy on anyone, but the biggest thing is you don't know when they're coming. Right now, we've been on such a run, so you mean there could be pullbacks, but at the same time, just keep a little cash on the side that you need in case those markets go, so you're not pulling back. Other than that, just trust the market, keep reading, keep seeing where everything's going, watch reports, stuff like that. But you'll never time that. And if you're trying to time it, you're going to lose sleep over it, because you know what I mean? I would say just protect yourself a little bit, having a little bit of cash that on the side so you can sleep at night. But other than that, I just keep pumping it.
Do you think that your younger self would be in the position that you're in right now with your net worth?
Well, I mean, when I was 18, I thought by 25, I was going to have it all. But no, I'm proud of my portfolio. Like, if you asked me 7 years ago, I didn't think I'd have my portfolio, I guess. But no, I'm proud of what I've done, and hopefully I can continue it on and we don't get a big pullback. Usually every time I talk about my portfolio, the next Monday it turns red. So we'll see.
On a scale from 1 to 5, 1 being the lowest amount of risk, and then 5 being the highest amount of risk, what risk is your portfolio from that scale of 1 to 5?
3, because I got the long, like 30% of my portfolio is just the ETFs. The covered call stuff, it is what it is. Like I said, if it tanks, it tanks. I'm not a guy that panic sells, so I'm not too stressed about it. The only other ones is kind of maybe on the other options I do myself, because they're in individual names and everyone knows, like in those big recessions and stuff, like single names get crushed a little harder than the ETFs. But I mean, I'm fortunate. A lot of the names I bought at such low levels. So even if we do get these big pullbacks, I'm still, I'm up like, what am I up? 400% on SoFi. So, you know what I mean? So you got room to pull back if it does. And yeah, so I'd say, yeah, probably that 3-ish. I'd rate it.
What are some investing mistakes that you made early on that you think that others should always avoid?
Listening to that one hot topic, like the one hot stock talk. Like, everyone's going to tell you that their cousin has done the research, but they haven't, and this stock's going to go to the moon kind of thing. Yeah, I haven't got bit too bad at that. I think there was one where I maybe lost 10 grand on it or whatever. So, but don't listen to that. And a lot of times, if you're hearing about this penny stock, it's already had its move. So I know it's not as cool putting your 10 grand in an ETF or something like that, but do it. And it's different if you have extra money, you can take a little bit of cash and have these risky plays, or, shoot your shot kind of thing. But if 10 grand is majority of your portfolio, you shouldn't be jumping into build a foundation of a super until you get to like 100 grand. It should all be in ETFs. Like, just if that's your starting out, like, just pump 2 ETFs, grab a NASDAQ, grab a SPY, grab the S&P VFE up here in Canada, and don't look at anything until you hit 100K. Like, keep researching, keep looking up at stocks, like do research on individual stocks and write them down and your price you would have bought in and see how you did. But I feel like you have to build that foundation of that 100 grand at least. So then once you get to that 100 grand, you can just let it just do its thing. And then once you hit that 100 grand, maybe you can start playing 5 grand here, 5 grand there in something else you want to try. But I always tell people starting out, like, just stick to the basics till you get a little bit of a foundation for the portfolio.
How do you plan to instill investing knowledge and just financial literacy to your kids when they're old enough to start investing?
Kind of been thinking about, I think just be honest with them, like from day one, like show them how money works. And then also just teach them good values and like why you want to have money. You know what I mean? And like if you asked me at 18, it's oh, so I can have fancy cars and blah, blah, blah. But if you ask me today, it's so I can just stay home with my family or say I can start something like you're doing and help people. I think that's the biggest thing. Like money's sweet, but if you don't do good with it or have the right intentions with it, try to teach my kids to be thankful. And the biggest thing is just be honest with them. You know, this is how the market works. Even from a young age, this is what I'm doing. This is how much money's in this. This is how much money this money can make. This is, I think if I had that as a kid, I'd be so much further ahead because, and then another thing too is just hopefully I've done well that I can kind of help them because it's so expensive in Canada right now too. So they could grow up to be great kids and have, you know, a good job, but they might not have that extra cash. So if hopefully I can do well and if they're, you know, got a good head on their shoulders, then I can help point them in the right direction and kind of, it's not timing the market, it's time in the market. So if you can start them out at 18 years old and helping them with these accounts or they can start funding it, they're going to have so much more money than me.
If someone is 50 years old or 60 years old, do you think that it's too late for them to invest in the stock market and build a super high net worth?
You're behind for sure. Like it sucks. I've had those conversations, but you got to be honest with them. Unless you're like coming into big money, that's where I'm on the team of like the covered calls and stuff like that. And like these yield maxes, like say you're 60 and you only have 100 grand or something. I get there's a lot of risk in some of these things, but maybe it pays you 50 grand a year. You know what I mean? Like where else are you going to get it? You're kind of forced. I'm not saying it's the right thing, but it's like you're kind of running out of options unless you're coming into money or first you finally made your way up in that company that now you're going to be making a stupid amount of money. Maybe you could catch up. But if you're starting at 50 or 60, like you got to work an extra probably 10, 15 years and be so disciplined. It's tough. It's a tough conversation to have. I've had it. I've talked to guys about it. Yeah, you don't want to be 50, 60 with nothing. It puts you in a tough spot, unfortunately.
What are some tips you have for investors who want to live off of dividends as fast as possible, but also as safely and reliable as possible?
If you're young, I don't think you should. Like it's tempting. Like if I look at my portfolio and like Adriano, that'd be sweet. But it's just at the same time, I don't want all my eggs in one basket yet. I mean, maybe once I hit that 40, you know what I mean? Maybe it switches or if you're young and like, I don't think you should be going all in them. I think you need the growth. I'm not against you having a little bit because seeing that money, the nice thing with those covered calls too, though, like they get you addicted to the stock market. Like, you know what I mean? You put $1,000 in the S&P and you get 10%, like you made $100. That's boring, but you put $1,000 in these covered calls and the next month you see, you know, whatever, 10, $20. It's like, it kind of grabs you, you know what I mean? And I think that's the biggest thing is just people just get bored of it because they don't have the capital in there. So it's like, you got to just, it's just so important to just show people, yeah, you only made $100 on 10%, but like when you have a million, like there's 100 grand coming. Now it's cool. I find people just quit before it gets cool. So, but I kind of like the covered call thing for like, I know it grabs the attention. Like even on Blossom, there's guys posting, you know, just received my first $10, like, wow. And it's like right on, like that's, whereas like they're not posting, oh, my S&P, I'm up $10. You know what I mean? So I find it's kind of good to like get the attraction of the young guys, but I think look into the ETFs and like make sure you're, like I say, building that foundation with them. So I'm not against it for sure.
Should investors be also thinking about NAV erosion in some cases? Because let's say you get like 100,000 in dividends, but you also lost like 60,000 in principal. So your net is 40,000, which is great. But should investors also be thinking about NAV erosion too? Because with ETFs, because I know some people like yourself do your options yourself.
Oh, 100%. I don't like it. Like that's why I sold MSTY. Like I said, I'm a gambler by heart. Like, so I was like, okay, I'll throw my 10 grand into it or 10 or 15 grand I put into it. And yeah, the dividends were sweet, but then I noticed that like, or not dividends, but the distributions. And I noticed I was like, they're getting smaller. My NAV's kind of getting eaten up. So that's why I sold them. Like I made like 10 grand in distributions, but I was also down like 9,500 or something. So it's like, I was like, whatever. So I just rolled it into, some of these other covered calls. Like I said, like I'm kind of more on that, like on the safe, not like the safer stuff, because I've been in like HYLD for 4 years or 3 years now. And it's like, I'm up 20% on the fund, plus it's paid me 14%. And it's like, I'm going to use those. I still do like the nice thing about those riskier ones, in my opinion, is like you get the money now. So it's like, I want to build that 5K. It's like, well, I bought Hui. I think it cost me 100. I bought 100 shares. It paid me $500 the other day. And I mean, Robinhood, it's been running well. So I'm up on it. So it's like, okay, but I'm not reinvesting that. Like, I just want to, it helps me build me to that 5 grand goal. And then, like I said, as soon as I hit that, it's just going to get every month I'll buy the long-term ETFs and stuff like that.
Do you have any last words for investors who are from Blossom or just wondering and maybe even look up to your story?
Well, for one, reach out to me. I'm an open book. Like, I've had lots of people just message me and stuff like that. And, I have no problem helping and answering best my ability. So if you see this and you have a question, just message me on Blossom. I don't mind that at all. Another thing is just keep at it. Like, don't compare yourself to people. Like, you might stare at my portfolio and be like, oh, I wish I was there. But there's guys that make what I have in a week. You know what I mean? Like, there's always going to be someone. And the thing is, like, I was in those people's shoes. Like, if you just stick to it and trust the system and trust the market and enjoy the journey, but you'll be there. Like, there's lots of guys starting with 20 grand. It's like, well, it's pretty close to where I started. And, in 7 years down the road, they're going to be sitting at big money if they keep at it. So I would say just don't compare yourself to people. Reach out to people that are maybe having a little more success than you. They want to help. Like, don't be intimidated. Also, shoot your shot. Just reach out and just keep doing what you're doing, and I'm sure you'll make out fine.
Now, if you guys like this video, please give it a like, because this cute puppy did. And don't forget to check out our last interview right here on your screen. I love you guys so much. Crushing the stock market, and take it easy.